Hey traders, welcome back to the channel. It is Tuesday, March 3rd. And markets just wrapped up one of the wildest sessions of the year. And if you weren't watching today, you missed a masterclass in how fear moves money. So here's what happened. The Dow closed down 403 points, finishing at 48,501. The S&P 500 dropped 0.94% to 6,816. The Nasdaq fell 1.02% to close at 22,516. But here's what those closing numbers don't tell you. At the worst point of the day, the Dow was down over 1,200 points, and the S&P was down 2.5%. The Nasdaq was down nearly 3%, and the markets did recover. And the reason why is the real story. It all comes back to the war in Iran. Last weekend, as you know, the U.S. and Israel launched coordinated strikes on Iran under Operation Epstein Fury. Oh, I'm sorry, it's actually called Operation Epic Fury. Anyway, the strikes killed Iran's supreme leader, and they targeted military and nuclear sites. Iran predictably retaliated fast, hitting U.S. bases across the Gulf and most critically threatening to shut down the Strait of Hormuz and also killing a number of Americans in the process. The IRGC declared the strait closed and warned they would, quote, set fire to any ship that tried to pass. Traffic through that waterway, which carries roughly 20% of the world's daily oil supply, dropped to nearly zero. Shipping giants Maersk and Hapag-Lloyd suspended all transits. This is definitely not a drill. This is the aorta of global energy getting cut off, and markets priced in the absolute worst case scenario this morning. Now, for me, I went short today, just went short on the SPY, got put options on the SPY, stayed in only about 30 minutes. I was out my remaining contract by, I believe, 9:10 this morning. I'm in Central Time Zone. So yeah, I was in and out within 30 minutes today, made some good money. So it just proves you can go long, you can go short. It doesn't matter. You just got to be able to look at the charts, look at the candlesticks. I know I sound like a broken record, but that's truly what it is. So yesterday I went long, made money. Today I went short, made money. But back to the news. So oil surged over 9% at its peak today. The fear index, the VIX, spiked above 25, its highest level since November. Energy stocks popped hard while airlines, tech, and everything else got crushed. And then Trump posted on Truth Social that the U.S. Navy will escort tankers through the strait and guarantee the free flow of energy to the world. That one post triggered a massive reversal. Oil pulled back. The Dow clawed back over 800 points off its lows. The market basically said, okay, maybe this doesn't become a $150 a barrel catastrophe. And that's the lesson here, really. Geopolitical fear creates massive intraday swings, but the market is also pricing in outcomes, not just events. When the White House gave it a floor, buyers stepped in. The one bright spot today, Target. The retailer beat earnings expectations, posting adjusted EPS of $2.44 against the $2.16 estimate, a 13% beat, and guided 2026 EPS between $7.50 and $8.50. Target closed up over 3.5% in a sea of red. So tomorrow, watch for the ADP employment report and the ISM services index. Both drop at 8:15 and 10 a.m. Eastern time. But all eyes stay on the strait and the war in Iran. If tanker traffic stays blocked, $100 oil is back on the table, and this sell-off has more room to run. And no matter what anybody says, I feel like this war has a little bit longer to go, because if there's any advice I would give anybody, it's that When any politician says that this war is going to be over quickly, don't believe them. So I'll be back here tomorrow. Until then, stay sharp. Be quick on your ins and outs, and just trade the chart, trade the candlesticks. So that's it for today. See you tomorrow. Bye-bye, everybody.